Yeah, man. And then number one, for the first time since the portfolio check started, we have Capitec. And for those who follow me on Instagram, I recently posted a picture of me in front of a Capitec business branch. But anyway, Capitec, a gain of 15.15%. Yes.
A whooping 15%.
15%.
No, I'm going to let you have this moment. I'm going to let Hello, everyone. Dear investors, we are on episode 5 of the Investment Candle.
Yep.
And again, my name is Chipiwa. I'm still the host. I'm not going anywhere. I was never a guest, and I'm just still a co-host. So I'm not alone, as I don't roll alone all the time. I roll with Nico.
What up?
Yeah. It's very sad today that we don't have our sports jerseys. I was like, what happened? We were on a roll, man. What happened?
You know what? We needed something to happen, and Bayana winning, making it to the second round, and the netball ladies.
That should be a reason more for us to kind of wear the jersey. You know?
So like we were waiting for it to happen, and then we move accordingly. Well done to Bayana, by the way, and the netball ladies representing us, supplying us with the national pride. Congratulations, guys.
Someone made a joke and said women have been carrying the South African flag.
They have. No, they have. Listen, like if the chaps can't do it,
you know what? It makes sense. Otherwise, are you well, my brother?
I am good, my man. I am.
How are you enjoying the weather in Cape Town? It's been relatively warm this week.
It's been excellent. I think only today where it started taking a turn for the worse, like recently. I think it saw the people striking, and it was like, yo, I'm also gonna go on strike. But otherwise, it's been excellent weather. I'm enjoying it. And you?
Yeah, no, I mean, I enjoyed yesterday. Yesterday was quite warm.
It's fantastic.
And then I think Tuesday, I was working from home, and I was just like, just working from outside because it was really warm.
Really?
So I'm like, let me just sunbathe. I'm from Limpopo, man. You know how we do. You know how we roll.
You just mentioned sunbathing and Limpopo in the same sentence. Very, very progressive.
But I mean, we used to play soccer and every kind of sport in that heat, So
yeah.
I'm built for this thing.
Now you are, my man. And now we're in episode 5.
Yeah. But nonetheless, I'm sure you cannot wait to kind of talk about the portfolio. I mean, hit me with it, man. How are we doing with the portfolio? And
so
let's take it away.
The portfolio check. Thank you once again for supporting it. There's been some questions, which we're gonna deal with. But let's get straight into the portfolio check. Coming in at number 4.
So today, just because
we're ranking it. We're ranking it. Coming in at number 4.
I see your play.
Coming in at number 4, which I should mention. By the way, I should mention that the screen is green. And it's absolutely fantastic. And we run about 7.5.
Wow.
Up.
In just a month, eh?
In a month. We are beating inflation already. But coming in number 4, it's Naspers at 1.46% to the good. We should have like a button that gives us a clap. That's Naspers. It's recovered because it's been in the red for the last 2 episodes. So we're finally seeing it on the green. Well done, Naspers. Well done, Nico.
Of course.
Coming in at number 3, it is Discovery.
Yeah.
Discovery with a gain of 6.25%. Fantastic. Well done, Discovery. Well done, Adrian Gore. And most importantly,
high single digit.
And most importantly, well done to Fiwa on that. And then coming in at number 2.
Yeah.
This is where it gets very, very interesting. ShopRite.
Yeah.
For the first time, ShopRite is not number 1.
Yeah.
Coming in number 2 is ShopRite with a gain of 11.78%. I mean, we're going to get straight into it, but
double digits. I mean,
it's double digits, bro.
It's still quite impressive. But I
It's
mean,
double
the
digits.
mere fact that it's number 2, maybe it's time I have a chat with Mr. Engelbert. We're like, what's happening?
What's happening? Yeah. No, man. And then number 1, for the first time since the portfolio check started, we have Capitec. And for those who follow me on Instagram, I recently posted a picture of me in front of a Capitec business branch. But anyway, Capitec, a gain of 15.15%. Yes.
A whooping 15%.
15%.
No, I'm gonna let you have this moment. I'm gonna let you have this moment. What do you think is the catalyst for that? For such a gain in a short period?
You know what? Nothing much has changed. I'll be honest with you. Over the past couple of weeks, we've been seeing a recovery.
Okay.
And I think this is just continuing of that recovery. This share has been undervalued. And you might be saying that, listen, like it's got a P ratio of 21 plus.
Yeah.
Given of where this company
of which
is.
P ratio is explained in second episode.
Yeah.
In detail.
Yes, episode 2.
Episode 3
and
as
episode 3, we go
Yeah.
into the PE ratio. It's very important. Please check it out. With the high, it's relatively high, especially compared to other banks. But man, Capitec, fun fact about Capitec, it has more clients than the population of Zimbabwe.
What's the population of Zimbabwe? 25 mil?
No, I think it's around about 16 million. So Capitec has about 20 million.
Interesting.
So with that,
you're on a roll. Not only are you on the leaderboard leading, you're also dropping some facts.
I mean, come on now. Come on. But going back to the recovery, it's taking place nicely. It's going along quite well. So that has been my best performer this week, and I will take those flowers, even though you're not going to give them to me.
No, I mean, investors, please, let's congratulate Nico on this one. A whooping 15%. I mean, it's quite impressive, man. It's really impressive.
No, it's fantastic. And no new developments on my side, on the Capitec side, as well as the Naspers side. What we explained in episode 4 about that easing of the cross holding, you can check it out. Nothing much has changed from then. And you, any developments with Discovery and ShopRite?
No, nothing of late. But I mean, ShopRite kind of reported their numbers.
Yes.
Came out with a trading statement. I posted about it in terms of where the earnings are pretty much in good shape as well.
Yeah.
I mean, I think it's the first year they rope in the business that they bought from Massmart.
Yes.
I remember that business.
Yes.
So that's been included. So that's why you've seen an uptick on the revenue to a double digit. So it's I mean, it's nothing. There's no really much development. I mean, we'll see when they actually release the actual numbers and what.
And I don't think there's going to be much of a difference with what we saw in the trading statement.
No.
Strong statement. We go on about it. This is some excellence, man.
Yeah, it really is, man. I mean, look, I love ShopRite. I love those guys. I feel like they have mastered the art of retailing. They know what they're doing, and they kind of leverage off the history and just continuing reinvesting and all of that.
Yeah.
And it's quite impressive what they've done. Someone posted something on Twitter and be like, why is it that Pick n Pay has been trailing ShopRite for quite a long time?
Yeah.
I was like, look, ShopRite's model is to own and operate their own stores, right?
Correct.
Which means that they have pretty much a decent influence on the margins, better than Pick n Pay, because Pick n Pay has a mixture of franchise and corporate stores. So it becomes a little bit of a margin reduction on that.
Yeah.
But also Capitec has faced a couple of issues in terms of on their supply chain as well.
ShopRite.
Pick n Pay.
Pick n Pay, sorry.
So that's kind of what kind of had their share price and also had their margins as well. So they had a blunder around a rollout of an accounting system, all those different things.
It's a blunder, eh?
So it's been quite a journey in retailing. For this too. But I think by far ShopRite is still the best retailer I've seen around.
And you mentioned something quite interesting. You said that was it someone who tweeted about the difference of the contrasting Pick and Pay and Shoprite.
Yeah.
It hasn't always been like this. Capitec not Capitec, Pick and Pay for a long time was the retailer. It was not always that Shoprite is dominating the way that they're dominating. Something quite interesting. I mean, like if you were born pretty later on, you just woke up to ShopRite's dominance. It's not always like that. So no, man, it's a great investment, double digit.
Yeah.
You're nearly doubling inflation, which is absolutely fantastic. Any developments from the Discovery side?
Nothing much. I haven't looked. They'll probably release some trading statement.
Yeah.
I mean, they've got a junior end, but I haven't gotten time to kind of get around it.
Yeah.
And to have a comment on it. But
yeah.
Judging from a share price, I mean, it's up 6% odd.
It's up, yeah.
So that still means that we're still on par. I mean, my view on it, it still remains the same. I mean, look, our investment tenor so far, it's only been a month, right?
Yes.
So there isn't much to write home about it. But I'm still very much bullish about Discovery.
Yeah.
And believe that, there's still a lot of value unlock that can be done, and they still can grow that business to a much bigger business than it is right now, because I mean they've got the bank, which is still at its infancy.
Yes.
And they've been reducing the losses in the bank. So we should see some really good growth coming through.
You mentioned a term there, which I'd like us just to get into for the benefit of the investors. You said bullish.
Yeah.
What does bullish mean? And I know there's an antonym for being bullish, which is bearish. What is being bullish?
Being bullish, it means that you are confident about the future of the company.
Yeah.
That it's gonna be positive.
Yes.
You're positive about the future of the company.
That's it.
And then obviously the opposite is that you have a negative outlook about the company, of the future of the company.
So I remember when I was at UJ, and my one lecturer explained it like this. When a bull gores someone, it goes from the bottom going up. And then when a bear like slaps you, like hits you,
it goes down.
So being bullish is being optimistic about the positive side, and then being bearish is about being pessimistic and therefore going down. But yeah, that's what it means to being a bull and a bear.
I should meet this lecturer of finance of yours. Seems like you learned a lot from him.
No, I learned a lot. Yeah. But I think it's also important because you can be both. You can be bullish in some instances, and you can be bearish in some instances.
When I was when I was an analyst, I used to have a bullish and a bearish view of the company. Because I mean, what if what I believe doesn't happen?
Yeah.
Then what is my view?
Yeah.
Then you see that's kind of what you should do.
Yeah.
To have a bullish value and a bearish value, and kind of see where the value where the difference lies, and you make an opinion on that.
100%.
In terms of that's how you determine a margin of safety, right?
100%.
To see, okay, if they are too far apart, are my assumptions a little bit too optimistic? What's happening? Is it too risky to enter? Because it can be an indication of that, right? That it's too risky to enter because the bearish side and the bullish side are too far apart, So
yeah. Tell us, investors, are you a bull or are you a bear? But
anyway, anything that you're looking to add, or the last time, the last episode, we spoke about Richmond. You were very optimistic about Richmond.
I was.
Is there any developments in that regard?
Yeah. So in fact, let me get into Richmond. But before I get into my wish list here, is that I found out some more data about that uptick of Richmond.
Yeah.
So there was a share consolidation.
Okay.
Which makes sense. Which makes a lot of sense in how a company can actually go from 200 to 2,000 all within a space of a day. So there was a share consolidation, meaning that the company was limiting the number of shares that were in circulation in the market. When they do that, obviously the price, you're pushing the price up to a certain level. Now, where investors can actually make a gain there, if there's a mismatch between the number of shares in circulation compared to how many of the or how much of the ratio they're willing to actually limit. And when I looked at the ratio, it's almost par. And because it's almost par, I didn't see a gain. I didn't see the potential of a gain. With the exception of the reason that I gave, which is the opening up of China's economy. That could be a possible opportunity. So I am slightly bullish, to use that word, but I don't think I'm going to execute on that. So that's why I've backtracked on
Richmond.
On Richmond. But like
but is it a company that you think you can own for long term? Like, for instance, I know ShopRite, I can own ShopRite at any price. For long term though, but for a short term, is it a company that you can own for a 5 years period? That's my question.
Like, I think for the long term, I'd rather own a Remgrow. I'd rather own a Remgrow than a Richmond.
Direct exposure to Mr.
No, stop this. You're gonna get us into trouble. It's gonna get us into trouble.
Okay.
I'd rather have a Remgrow, and it's gonna lead me to what I'm thinking about in
maybe
a moment.
You can run through us your watch list in terms.
My list is buy more of Capitec.
Okay.
Gridron Shipping. So it's a global logistics company that move these containers all around the world, which have seen tremendous growth over the past 2 years. I'm talking about
logistics and road,
as in the ship.
Oh, okay.
So shipping, it's in the name, Gridron Shipping.
Okay.
ArcelorMittal. The reason why I have ArcelorMittal here is that I was going through Reddit. Reddit, it's a place where people can just share their opinion, unfiltered. And there's so much chatter about the discount at the moment that ArcelorMittal is talking about. Someone actually, I forget the name. Sorry, if you're watching or get to listen to the podcast, the next time I'll give you a shout out. Mention, could this be a discount of a lifetime? It was interesting. It was a debate. So I just had them at my watch list just in case. And then Remgrow, I'm going to get into Remgrow. Sappi, what we know them normally as a paper making company, but it's actually very, very different. I'm going to get into that. And then Sasol came out with some good numbers, man. And their share price has recovered so considerably from that COVID.
The one that you made $1 million from.
Moving on right along, buying more of Naspers. And the last one is PSG. And that I'll also like just to speak a little bit about that. Alongside Remgrow. So here is my thinking, mate. And I want you to challenge it. You two investors, I would like you to challenge it. So my thinking is that I see that holding companies at the moment, particularly in South Africa, I am convinced that they feel that their portfolio, in fact, because of the legacy beginnings of these companies, such as a Remgrow and a PSG, they feel like a lot of their portfolio is listed. And the right ratio of between unlisted and listed is skewed towards listed, which is undesirable at the moment. I'm convinced that that is what they're thinking. And as a result, they are slowly but surely either unbundling or delisting. So I'll give you an example. Remgrow recently unbundled, or rather sold, a portion of Mediclinic. And not just selling it off, but they're going to delist it. In fact, have they delisted already?
I'm not sure, but yeah.
Please tell us, investors. I remember big
that.
plans to actually do that. Distal, which they sold off, I think all of their portion, or if a big portion of their Distal.
So the deal structure for Distal and Heineken is they're
going to continue listing it?
No, it's going to be delisted.
Exactly.
But they're not selling off completely out of it. There's going to be a new entity that is going to be created, of which I think Remgrow is going to own a stake, and then Heineken is going to own a stake. And then that company will be the holding company, to be like an SPV that holds.
I see.
Distal.
I see. But like, that's Remgrow side. And if you look at the Remgrow stable, there's a few assets there that are listed, and
Yeah.
with the growing regulatory environment, which doesn't shrink. This environment doesn't shrink; it only grows. Next one is PSG. We've seen heavy unbundling over Capitec. They price assets, in my view.
Yeah.
And I was listening to an interview of Pete Maton, and he is convinced, or rather, I think that he is convinced that he's going to go on a delisting expedition, taking over the reins from his dad, who has been excellent, and him as well. He's very, very competent. He's very, very good. But I think he wants to take it in a different direction, where his dad went via the do it in the spotlight, do it in the stadium, do it in that arena of a stock exchange.
Yeah.
He has a different direction, and I would like a piece of that. So, for example, if I now own a PSG, when that unbundling and those sell-offs and the delisting happens, me as a shareholder, I'm going to be compensated for that. So that's where I'm thinking about. That's why I'm looking at investment holding companies.
You really like investment holding companies, man.
I think as I hate saying this, I did accounting, and as much as how I don't like how I did accounting, but that part of me is still there. And when I think of group accounting, I think of those deals. I think of movement of companies, and I like that type of thing. So that's why I'm a fan of holding companies at the moment, because of where we're going. I think if I am going to buy, it's most likely going to be either I add more of what I currently have, or Remgro or PSG.
Remgro or PSG. I would like to hear your thoughts, investors. What do you think between Remgro or PSG, or adding some more of Capitec?
Yes.
Or adding some more of Naspers?
Yep. You?
Okay.
Wish list.
For me, I think I spoke about one that I wanted to add, which is BAT. I'm still very much bullish about it.
Do you smoke? I'm joking.
No. I don't smoke.
Yeah.
But I think I've spoken quite a bit about it in the last episode, in terms of the biggest challenges that they're facing now in terms of regulatory changes. All around the world, even. It's not even in South African context. But I did invest in my personal capacity on BAT. We haven't pulled the trigger yet on the investment kernel portfolio, but I'd still want to get an exposure on that, even on the investment kernel portfolio.
Yes.
But I've got quite a bit of few companies that I'm actually looking into. But for the sake of time, right, I'll just speak about the one that I'm really considering now. Because I'm looking into a couple of Absa, a couple of banks as well. A couple of retailers as well, a couple of
retailers?
miners. Yeah, I mean clicks.
Oh, okay.
It's I call it a glorified retailer.
Oh.
Because I mean, the amount of stock that they have in the store in terms of square meter, right? You literally have a lot of grocery items, fashion things, not fashion things, cosmetic things, and all of those things in the store, more than the actual medicine that they sell. Right?
Quite interesting.
So I'm just like, look, Clicks is a glorified retailer in my opinion.
Interesting. Yeah.
Right. But I'm looking at Implants. That's Anglo American Platinum. So the share price of Anglo American Platinum to date, it's done half since last year. It's gone down 50%.
Since last year?
Since last year, yeah. Year to date is like 40% down, I think.
Down?
45% down.
What happened?
So they've had a couple of issues. They literally just got a new CEO now. So they've got a lot of internal politics that is going on in terms of strategy. They've got a mine in Mankweng that there was a growth. You don't believe me?
No, like it's incredible. Like Anglo Platinum, I remember earning such a wonderful dividend 2 years ago with Anglo
Platinum. Yeah.
And now we're half.
Yeah, no, they're half. I mean, there's a couple of issues that I can point out, right?
Yeah.
From their governance perspective, they got a new CEO now that they've appointed. The other one, I think she hasn't left.
I'm going to put it on the screen. We're going to ask to put it on the screen. It is down 45% year to date.
Yeah, year to date is down 45%. So they've had some couple of governance issues, in my opinion, that the CEO in terms of strategy is not agreeing with the group, because I mean Anglo-Plat is owned 80% by Anglo-American,
Correct.
right? So there's still like a group structure in terms of what needs to be done and all of that stuff. I think the CEO was not in agreement in terms of what needs to be done.
Yeah.
There's they have a mine in Mankweng
Yeah.
that they were planning on expanding, but there's been a lot of disagreement around that, in terms of what strategies to do, when is the right time to actually spend that capex. So remember, mining is a very capital intensive environment,
Extremely
right?
capital intensive.
So there's probably a debate around investing in those, in that, expanding that mining, and the right time to expand that money, because we are in high inflation environment, right? So what happened was they have not been spending on expansion and maintenance and all of this, and all of this mining, right? So they're trying to play catch up,
Yeah.
and that's what we've seen in terms of their capital expenditure as well has been very high.
Yeah.
Because when they're trying to catch up with the investment, in the high inflation area, means that the cost is relatively higher than it would have if they had invested a long time ago.
Wow.
So they're trying to catch up with the likes of Impala that have been investing a lot in their mining environment and stuff like that. So yeah, they've seen a couple of issues that do that. I mean, it's all of technical issues around that,
technical,
right?
yeah.
But you just have to take a view as to whether or not these issues can be solved, right?
Yeah, no, true, 100%.
And the big thing is the PGM, which is the platinum
group
metals, which consist of a couple of things:
platinum, palladium, rhodium,
and the other ones that I
if my dad is watching this, he's gonna be so embarrassed because he was a science teacher. Yeah.
So it's a couple of that, and they've been seeing a lot of pressure on the demand. There's a lot of uncertainty around the demand of all those things. With the establishment of the hydrogen industry,
yes,
that powers the cars,
yes,
also energy in terms of electricity and all those things, right? So that technology, in my space, there's green hydrogen power stations that people are trying to build. It's very big in Namibia now. So in that industry, right, the technology is still relatively expensive.
It's still expensive. Yeah.
So there isn't a lot of investment that is going there. Not a lot of investors are jumping in terms of rolling out the technology, such that the demand for the PGMs gets high. So there's a lot of uncertainty around the demand for PGMs in the market right now. So when you couple all these issues, those are the issues that culminated into making the share price go down. And I mean, even the earnings of Amplats were really
low.
Yeah. So it was quite sad. I think rhodium, if not palladium, one of the two was down. The sales for it was down 47%.
Okay.
So you can see, but they had issues with, they've got a smelter in Polokwane, right? Which is like a factory where they melt things. Even that had a couple of issues as well in terms of coming back online and all those things.
Here's my question, bro. Is this stuff fixable? Meaning that, is it within the control of management to actually fix this, or is this something existential?
Look,
if you can just distill that down.
Look, in my opinion, this is something fixable.
Okay.
Right? It's something that can be. It's a matter of a detail thing. Where we're going. Yeah, like it's a matter of where we're going wrong and what can we do to actually correct this. Cool. They need to burn some cash, unfortunately. That needs to happen. I think they still have a fairly good balance sheet to actually carry out the investments that is needed. So I think these issues can be solved. But the demand side, right? It's still the issue that the market is uncertain around. Yeah. I mean, the prices of PGM metals as well. It's been down as well. But that's external.
Exactly.
Right?
I was about to say
it's not really at the end of the day, the PGMs is very cyclical, right? Around the market. So,
stuff that you can control, you must control. Exactly. Stuff that you can't control, try your best to control. And if you can't do it, so be it. But I think for me, it's quite powerful. Like, can you fix an issue? And if the answer is yes, then I think that is good enough reason to say that, okay, maybe I can take a punt on this type of thing?
Yeah, but I mean, I just need to assess the management if
Yeah,
they are
it's gonna be very,
capable
very.
and to do
I'm
that.
just thinking now, mate, like assessing management, because it's very important. It's quite easy. I'll
Mm.
give you an example. Well, I'm not saying it's quite easy to actually do it, but it's easy to fall into just look at the qualifications. Steinhoff, okay, their audit committee consisted of 3 PhDs in accounting. Okay, so now that tells me that I think
Yeah.
you need a little bit more than rather than just looking at qualifications of the people there. And it'll be interesting in future episodes to have a look at how have you assessed the management of Mplats. And please come back with the feedback as to how you did it, because this thing even dribbles people that have been investing a long time.
Look, for me, in terms of management assessment, right, it boils down to when someone is wrong, right?
Interesting. See, now we're getting into it.
Yeah, because I mean, look, I spoke about ShopRite's management that they got it wrong with Africa.
With Africa.
And they admitted that they got it wrong. And they did active actions to correct that, right? And that for me tells me I'm dealing with emotionally intelligent people, people that are not trying to sell me something that is not, but something that it is, right? Because they got it wrong. They were not growing as they thought they would. They were losing money in Africa. And they admitted that they were losing money, and we are going to look into the strategy. But if once you have a business that is making losses and you attend a meeting, right? And you come out of that meeting very positive about that business based off what the management said, I'm telling you, it's most likely that they're lying to you.
Oh.
Most likely, because these guys are salespeople.
They are.
Right?
They can
They're
speak.
very good. They
Silver
can,
tongue.
They can really, like, I used to attend management meetings, right? And then they get asked about the strategy. They will talk so
beautiful strategy.
And then you're like,
beautiful strategy.
You're like,
it's amazing.
and most times you're like, but those things that you're talking about, like for instance, Massmart, right?
Okay.
They had issues around growing sales, around focus in terms of product mix and all those things. They were not getting it right. Okay, we asked them, what is your strategy? Because game was struggling bad, right?
I remember.
Yeah, they were closing store every now and then because it was making losses. They're just sitting with all these overheads and it's not making money. So then their strategy came in. They're like, yeah, no, we're going to roll out, what's this, online shopping. We're going to go strong on, what's the term? What's the tech term, man?
What platform?
Not platform. What's e-commerce? Our strategy, we're going to go flat on e-commerce. It's going to be a big thing. We're going to augment it. We're going to do all these things. And then what? Look now, it's delisted.
But like, didn't they? Because like, I remember Massmart.
But it was not working.
It was not working.
It was not working.
They purchased one cart and...
They purchased one cart. They purchased this other one as well. What delivery? I used to cover Massmart, man. My previous manager would be very disappointed.
And it didn't work, eh?
It was not working because they were far behind. It's very difficult to catch up, you know? It's very difficult. And there isn't a lot of good turnaround strategies for retailers. There isn't a lot of retailers that struggled and actually came back around.
So going back to the thing of management, right? You say that this management outlined a big turnaround strategy.
Listen, beautiful strategy.
Yeah,
like they did wonderful strategy talking about this is what you're gonna do. They're gonna do. They've been doing a couple of M&As, and even the stuff that they were buying, it just didn't make strategic sense to me, right? In terms of what they need to do, because if you're buying a startup, you still need to invest in that startup significantly in order to tap into growing the customer base. So that doesn't make sense. right?
I know this. I know the founder of the startup that they bought.
I'm just like, but bruh, you still need to significantly invest in that startup to actually grow that fleet, to actually grow the business to be where you are. But you're struggling to invest in the core business. Let's go back to what game is selling, right?
Yeah.
When they started putting all this many things wanted to be Walmart, that's where they missed it. Because when we went to game, remember back in the day, when you went to game, you wanted a laptop.
Or Dion. Remember Dion?
Yes, even Dion closed.
Yeah, even Dion.
Like they just closed entirely.
It's not there anymore. There's no more Dion.
That's my thing, right? That you need to go back to the core strategy. When a business is struggling, you need to go back to the core strategy and be like, okay, what have we added that when did this thing go down, right? So that's my thing. But management were there with e-commerce is gonna be our next growth phase. We're gonna be big and we're gonna accelerate growth.
Bro, I won't lie. I'm still convinced. I think we need an entire episode on assessing management, and it would be good to have one of these investment holding companies because they have a look at it. And I just wanted to mention, because we spoke about PGMs. We drifted a bit, but PGMs is platinum, palladium, rhodium, iridium, ruthenium, osmium.
What?
Yeah. How many? There's 7.
There's a couple of them.
There's a couple of them, but so just for my dad to forgive me. But all good. Thank you so much. That was this week's portfolio check.
But let's talk about, last week we spoke about the benchmark, right?
Yes.
We need to set the benchmark now. So what are your thoughts? I haven't discussed with this person, with this guy, in terms of what we're going to set the benchmark at.
Yeah.
I just want to hear your quick thinking, what you're thinking we need to beat in order to be good investors and all of that. Yeah.
Jeez. Let's start off with the base. Base is inflation, right? What is the upper bound of what the Reserve Bank is trying to achieve? 6%. Let's put it at 6%. That is the benchmark. Well, the base of the benchmark. But then let's not stop there. Let's add. Okay. What other risks do we see on top of the benchmark, or rather the lower base of the benchmark?
No, like my thoughts is, when I was thinking about it, if you're not beating the market and you're actively investing, then it doesn't make sense.
So are you just gonna say what index top 40?
So I was gonna say that the all share index.
The all share index.
Yeah.
Okay.
So it does around about 8%. It was only, I think, in 2021.
Yeah.
It did return of about 18%. That was a recovery from COVID, though.
Yeah, no, we can't do that.
Yeah,
we can't do that. Yeah,
but I'm saying that typically it does about 7 to 8%, I think. So that's still above the inflation.
Yes, it is. It is.
So if we can beat the inflation, but to take it a little bit step further, we take we beat the all share index, because there's we're gonna jump into that, but there's a index fund, right, that actually follows the all share index.
No, you're right. You're quite right.
So if we can beat that, I'd be happy. So the all share index, it's an index that takes pretty much all the shares on the JSE primary board, and then they average them out in terms of finding the price. There's technical and fundamentals in terms of finding all of that. There's no need for us to get into that. And then each year they look at the growth versus price at, say, 2021 versus price now, etc., etc.
No, I see it. So all share, that is our index.
Well, that's my suggestion.
That's our benchmark, rather.
That's my suggestion.
I like it. I like the all share, and I like the reason that you gave, because if you're actively investing in the market like we are, we need to beat the market. And that's how we prove that we are better than the market. No, I like it. It makes a lot of sense. So I think, let's have a crack at it.
Our benchmark is all share index.
All share index, that is our benchmark.
So and the JSE FTSE all share index.
That's at the moment, we're slightly behind.
Is it? What's the return?
At the moment, it's around about 7, high 7s.
High sevens.
High sevens.
That's fine. It
We're
happens.
slightly
We'll see
behind.
at the
And
end of the
we're
year.
a month in, so
Yeah, a month in.
so we'll see. But like that is our benchmark.
And we still have Nespas at 1%. I mean, it's still gonna come up.
Okay, you had to mention that. It's fine. You had to mention that. It's fine. That is our benchmark. Our benchmark investors. It is the All Share Index.
Okay, cool. So I wanted to chat about the passive investing and active investing.
Let's
right?
do it.
What is your thoughts around it? Right? Are you for investing for passive? And then, if I can give a background on passive, right? Passive just means that the investment product that you're investing in just literally follows an index of some sort, and that's literally what they do.
Yeah.
Right.
Yeah. So I think even just to enrich what you're saying, it's in the name. If you contrast the two, passive and active, what we are doing, because we are actively going into the market and looking for these assets and investing in them. So in the passive environment, you're not necessarily going into it looking at it. You are saying that whatever it is, that's what I'm taking.
Yeah.
You're not saying whatever it is, where are the bright sparks and where are the dark clouds, but you are saying that this is it. I'm investing in that. Yeah.
So what is your experience? Have you ever invested in any passive products?
My was first three. One of my first three passive investments that I made, I bought a Cetrix 40. Cetrix 40 ETF. Exchange traded fund, and it's still available even now. I even took a picture of what it consists of. So basically, as if you were saying, it tracks an index. It's like a basket of shares into one financial instrument. So if you purchase the one or invest in the one financial instrument, you basically have access to the top 40 index, which consists of 28% basic materials, 26% financials, 15% technology, 9% consumer staples, telecoms, consumer directory, so on and so forth, energy, healthcare, real estate, so on and so forth. So that breakdown of those different sectors all come together and form the top 40. The biggest one being Naspers, obviously.
Yeah.
Yes, I invested in that. That was the ETF, and it was good, but because I was so young, I wanted a little bit more action. Because of my risk profile at that stage was way more aggressive, which we're going to get into the different risk profiles, which inform your risk tolerance. I was a bit young, and maybe I should have just started off, but it can be a good start to get your feet wet. I have invested in Cetrix Top 40. It performed, but it didn't outperform because in itself was an index. Another one which I had invested in, it was the Cetrix Indy 25. So in the industrial sector on the JSC, those are the top 25 biggest companies. Biggest one being Naspers, again, obviously. That as well, but out of the ETFs, the Cetrix Indy 25 was the best performer. It even beat the top 40.
Oh, nice.
So that has been my experience. I really haven't gone into exchange traded notes. It was only exchange traded funds.
Yeah. I also haven't invested in exchange traded notes, no. But yeah, like you said, I pretty much have invested on the Cetrix Top 40. The Cetrix, they do have an S&P 500.
They do.
So I invested on that as well. So the S&P 500 did well.
Is it?
Yeah, it was literally my best passive one.
Okay.
Yeah, it was that. I did top 40, but like for me, that was more of a savings product than it is for an investment product.
It is.
Because I mean, your risk is hedged. You've got so many stocks in one basket that when one stock goes down, it doesn't really affect the total return perspective. So
it's safe, eh?
It's
safer.
It's safer. Yeah. So I think for 2 years it did about 9% or so on each year.
It's okay. It's not bad.
I was really young at that time, so I really wanted more actions.
Yeah.
So maybe let's chat about that. Like, what is your risk profile like? Like, what's your risk tolerance? Being that there's maybe I can contrast the two.
Yeah.
So there's ability to take risk, and then there's willingness to take risk. So the first one being the risk tolerance, right? Your risk tolerance, which is your willingness, is kind of determined by your understanding of risk, your knowledge around financial markets, investment products, and all those things. And then the ability, it's driven by what surrounds your life. What's your liquidity requirements? Do you need money ASAP? What is your reason for investing? Are you investing for short term? You investing for long term? Can you harbor money somewhere for longer? Do you need to pay for certain things with the money that you invest in? All these different things, right? So with that in mind, right, would you say that you are an aggressive investor, maybe medium or low risk kind of person, and all those things?
High, aggressive. And it is like, I like the way that you broke it down in my ability as well as willingness. And I think both are on the aggressive side. They really are. I mean, okay, I'm not going to get too personal, but yeah, let's just say that my understanding of financial markets is above average. My understanding of I know what I'm doing? Yes. Do I have the capital? Maybe. But I think to answer your question succinctly, shortly, precisely, definitely I'm on the aggressive side.
Okay.
And I even think we even dedicated an entire episode of actually looking at it for the long term. It's long, but not too long. And I think that also, as you said, informs where you'll be in that risk scale. So it's, I would say, 5 years. That's the ceiling. A bit less than that. I've got some stuff that's coming up personally. So I'm going after it. I'm absolutely going after it. So something like an ETF or an ETN, a passive, it's not really for me at the moment. I think as I get older, as I build up more of my asset base, that's when I'll be maybe leaning towards actually protecting what I've built.
Protecting capital preservation.
It's basically preserving what I've built. That's when my risk tolerance, my profile is going to get a little bit more moderate to conservative. But I think at the moment I'm in the part of my life where I have to go after it.
You
and
can
it's not
take
even
a little bit risk.
Yeah, man. It's not even, and I'm just thinking it's not even a case of this is by choice. It's by necessity, which is quite interesting. I have to be aggressive at the moment. And I think any builder, any entrepreneur, you have to go after it. And I think that's where I am at the moment.
Okay.
You?
No, that makes sense. Look, I'm that. I'm high up there.
Yeah.
In terms of,
you're in venture. You're involved in venture. So you're aggressive, huh?
Yeah, pretty much aggressive. So like for example, look, I love risk, right?
I've never heard of that one before. I love risk.
I love taking risks. And I know exactly the implications of risk, right? And maybe for the investors out there, right? That, we did contracts with the savings versus investing, right?
Yeah, we did.
Investing, you've got the possibility of losing your capital, whereas savings, your capital is preserved and you pretty much guaranteed returns on your savings.
Yeah.
And investing, you're not. So for me, I like taking risk because I know it's going to pay off. And I know I can afford it from a perspective of I'm still very young, right? I still got a little bit of time to correct my mistakes if I make mistakes, right? And that's the only way you learn, right? So maybe if I can get a little bit personal, when my money comes into my bank account, when that small money comes into my bank account.
Very large. Very large.
That small money comes into my bank account, right? Bearing in mind that not anybody can do this, right? Because we live in a very tough economy. South African economy is very tough.
It's very difficult.
And judging from even the unemployment rate as well, there's a lot of people that don't work, right? But when that little money that I earn comes into my bank account, I take about 20% of it.
20% of it.
Yeah, 20% of that income, 10% goes to savings and 10% goes to investment.
Interesting.
Right? In terms of the different products, it depends on what my appetite is in that particular month. So I told you about the property fund that I'm doing with a couple of my friends.
Yes.
I'm invested in that.
Is that part of the 10%?
Okay. That's part of the 10% of investment.
Okay.
And then I've got obviously shares that I buy on a monthly basis.
How consistent are you with your share purchasing? Every month?
Not every month,
but
pretty much. I would say that probably 9 out of 12 months I buy.
9 out of 12. Very consistent.
Yeah. So 9
very
out of
important
12.
Investors. Consistency.
9 out of 12 I buy. And then the savings products I've got, because I don't like going too passive. So I go on unit trust. It's still a little bit safer as well compared to like going on easy equities and actually buying a share directly. So unit trust is kind of like pooled funds. There's a lot of people that are knowledgeable managing that fund, etc. We spoke about fees
and
eating
your performance fees with non-performing funds.
Exactly. We spoke about fees on that. So that's kind of how I place myself, right? And unit trust, I started investing with unit trusts.
Okay.
Right? Around about that time when I learned investing through the JSE Investment Challenge. Then I started opening an account with Alan Gray, and then I've been investing every month since then, right? So it's stuff like that, if you can start, if you're a student and you've got a little bit of cash, I can understand that not everyone can do that, right? I need to emphasize that. And you don't need to pressurize yourself to do that, right? But if you've got a little bit of bursary money, I know there were people that used to earn 7K, 10K.
As a student.
From a bursary.
You're rich. You're rich.
As a bursary. So, I mean, you can literally put a little bit of extra. That $500 a month, right? Yeah. After 3 years to 5 years, it takes, 3 to 5 years is not that long a period. I promise you.
It's your degree.
I've been working for almost 5 years now, and I couldn't feel it, know.
I understand.
So it's that thing, right? That when you've got a little bit of time, when you've got a little bit of money, you can just start with that, right? I guess that's one of the questions that we're gonna go in with. Maybe let's start with that, right?
Let's do that. Yeah.
The questions that I got was, what is the ABC for investing? If I'm a new investor and I want to invest, what is the first thing that you would tell me that I should do?
Well, okay, the first thing has to be research. Before you can't do and then think later.
Like watch the podcast.
So the first thing, watch the podcast, listen to the podcast on every platform.
Yeah.
But the first thing has to be research. It's important. It's very, very important. I think understand what you're trying to do. The first thing, what is A? A is do your research. That's my A. What's your A?
I think my A would be, it's part of research, but first, just rate yourself in terms of risk. Are you the kind of person who's going to cry if they see their 500 that they just deposited went down to 300 Rand, right? So that's part of your research in terms of researching about yourself as well, on your risk tolerance, right? On how much risk can you stomach? Right? In terms of, if I'm putting my $500, am I willing to lose that money if it comes to that? Right? If not, then maybe I should look into saving and not investing.
According to our analytics, which we discuss every Sunday and our catch up, the cohort that seems to be loving our podcast, it's that age group of 20, 25, 30, 35. What would the A be? What do you reckon? It's this stuff is unique, but what do you reckon the risk tolerance is for that cohort? Because these are the people that are actually watching us every.
No, I think it would be medium to high.
Yeah,
probably medium to high.
I also think so.
Probably medium to high. So I think that's the first thing that you need to do. You understand that, but then the next thing that you can do is to then look into the products themselves, right? That if do I want to go active investing, which means that I'm going to be the one buying the shares on Easy Equities and stuff like that. Or I can invest on Satrix. They've got different passive products
They do.
that you can, that's your index funds. I don't know if they've got the notes as well.
They also have notes.
Yeah. So your notes and all those things. And it's relatively safer.
They have notes, yeah.
And then, or you can invest on unit trust, right? There's for instance, 91 has an equity fund. They've got a balance fund as well that kind of has all the products from your debt, property and equities and all those other things.
No, I was wrong. Cetrix does not have an ETN. It has an ETF. Apologies for that.
Yeah.
No.
So that's kind of the ABC for me. The next question was, how do I determine my risk tolerance and create investment strategy off of that? I think we've covered a little.
We've kind of touched risk tolerance.
We kind of touched on that. I don't know if you've got any additional thoughts.
No. I think maybe also be honest. Be honest with yourself, because it really is you. Look at your situation. Look at how you react. Look at your financial standing. So it's very much a personal thing. Look in the mirror before you look out of the window, basically.
Yeah. Okay. And then the next question is, what are common mistakes that investors should avoid?
What are common mistakes? I think it's herd mentality. So basically, just because just because you see people gravitating to a certain financial product, or it can be a company, or it can be a particular investment. Just by seeing lots of people there, and you're following because lots of people are going there, that's not a good thing.
Yeah.
In order for you to earn different results, better results, you're going to have to do something different. Okay. So I think a common mistake is that we all have that herd mentality. I think in every part of life, I think a herd mentality is not the greatest thing.
Yeah.
Right? Most aspects of life. So I think in investing as well, a mistake to avoid is just saying yes because another person says yes.
Yeah.
So avoid that. Look a little bit deeper into it. If you want to out earn, then you're gonna have to outthink.
Okay.
You can't. If you just think, you're going to get what's average. But if you want to a little bit more than that, you're gonna have to also do a little bit more than that. So that's the mistake.
Yeah. I think for me as well, it's the impatience.
That's a big one.
If you're investing, especially on equity instruments,
that's
need
a
patience,
big one,
because you're taking a view on the business. You are the owner of the business, right? And as you know, and you've heard that it takes a while for businesses to come around.
I have stories, mate. Especially with impatience. I have stories.
So that for me is the big one. And maybe the second one would be don't trade too often.
Yeah.
Like unless if you just I'm just gonna earn more and all of that. Like that buying and selling, the short-termism that you term
short-termism,
it can be a little bit dangerous.
It can be.
So that for me is that, like, we need to kind of be patient and not to look towards short term a lot.
No, I understand. I thought about another one, which it's kind of escapes my mind at the moment. But I think what I'll end this on is that a big mistake, which you should always try to avoid, is not liking our content and watching our
It's not watching. That's
and listening.
That's the very first big mistake you must avoid.
Gosh.
You must watch our content.
Oh my goodness gracious me! But like on a serious note, my last one is that price matters. It really, really does. You can have a good company, but if it's out of your price range, then is it really good for you? So the aim here is to buy low and sell high. It does get to a point where something just becomes too expensive.
Exactly.
And price does matter. So if you're getting insanely high PE ratios, and even just monetary wise, in the real terms, if this is worth way more.
Mm.
Then a better investment that can serve you is something that is actually affordable for you.
Mm.
Affordability, it can be a good thing, and it matters. Price matters.
Yeah.
Price matters. Yeah. So yeah.
And then the last question was, what are the investment opportunities for investors in South Africa? And
yeah, quite broad, because I mean, like you said, there's listed, and then for the more sophisticated people, there's even unlisted.
Yeah.
There's passive,
which is a very risky environment.
Extremely risky environment.
We've gotten our hands bent there a couple of times.
Yeah, but I, like that's when you really uncover the diamonds in the rough. But like you go down in the mine, the thing.
Yeah,
and obviously yes, there is definitely risk for that. But it's very, very broad in the listed space. I think what you're currently looking at with our portfolio on how retail. We've got great retailers in the banking space. I think there's still opportunity there. Yeah, man. I think that's where you can look at it. But it's a very broad question. I like the investor that asked this question. A little bit more specific. What type of space are you looking at? Unlisted, listed, passive, active? Yeah.
Yeah. No, I think you summarized it very nicely. It's a very broad question.
So broad.
You wouldn't know where to tackle it, right? And I think also, just in terms of platform-wise, it's been relatively easy now to invest. You can invest through your bank. You invest through easy equities.
Yeah.
I mean, the fees differ.
Yeah.
But yeah. Like, how much are the fees on things? Do you know the percentage on easy equities?
I don't know the percentage, but it's still 0, something. Yeah.
Okay.
It's still there.
Okay.
Yeah.
No, that makes sense. Yeah, just in terms of platform as well. I mean, you can invest through the bank. You can invest through easy equities. You can invest via asset managers as well. We covered a lot on around fees and what you pay depending on the fund. Tricks as well. They're relatively cheaper because they're not really active investors. They're just following the index and all those things. So there's a lot of opportunities in terms of platform wise on getting into investments. But yeah, I mean, that's
plenty. Continue listening to the podcast.
Yeah,
like seriously, I think I listen to this podcast. I listen to it when I take walks and when I go work out, and it's some good stuff, especially that element with the fees. Please go check that out. It's got its own segment as well. It's about 4 minutes.
Yeah,
very, very important. I think I would even say that is necessary content before you invest in something like a unit trust. Yeah, man.
No, I agree. But other than that, thank you, investors, as always. From Nico and I, episode 5, rolling out.
Episode 5. All the best, Bayana Bayana.